Hello once again, I'm Burry. Thank you for joining me. It is end of day, late night on March 10th, 2025. And I wanted to show you two peaks that I'm seeing in the model tonight because we have the CPI, I think, on Wednesday, which is the 12th. And then we have the Fed meeting on the 19th. So both of those are Wednesdays. It's 7 days apart from each other. And so I want to show you the model, the 10-minute model, which I believe is proposing that we see strength on these 2 days and a peak, so to speak. Yeah, so maybe we should just dive into the models right off the bat, and that way I can talk you through that. Thank you for joining me.
Donation QR codes and donation link below this video, and PayPal link below the YouTube video down in the description. Thank you for following me.
So this is the 10-minute model. Even though it says 5-minute, the 10-minute is in blue there. The SP500, it's a peak model. As you can see in the pink and red, it says peak model. And essentially, we're looking at the green wave right here. And so we have a substantial number of hits for both March 12th and also for March 19th. So my guess is we either see strength on the 11th, end of day, which could be a peak, right? Or if we have a sell-off on March 11th, odds are that we see some type of strength on the 12th. And then also on the 19th, the Fed date, we could have a punch upwards. So again, I was hoping we'd have a pretty strong sell-off into March 17th for the low. But I am getting a very strong read on the green wave, as you can see, for both dates. That's kind of the beauty of the green wave. You can see how it's calling out both of those dates. The CPI read and the Fed date for the 19th is strength days and peaks. So again, my hope would be like on March 11th that we sell off really hard into the end of day, March 11th. That way it'd be a very easy read, in my opinion, that there's going to be strength on the 12th, right? If we see a positive close on the 11th, then I would have to probably assume that the model is picking out a peak for the 11th. So that's where it gets a little tricky. So really looking for a positive close on the 11th, or if it's a nice red close on the 11th, then I would say that the probability shifts pretty strongly that the 12th is going to be some type of major upside or peak in the markets. I thought it was going to be a very strong sell-off into the 17th, but after seeing this, it's very clear to me that there's going to be some type of strength that appears on the 12th and on the 19th. So again, how long that lasts, I don't know. I'll have to watch the moving averages. But again, the best case scenario, in my opinion, would be that we would have a very strong sell-off on the 11th, right? So then the probability would shift very strongly that the 12th would be a positive upshot in the markets of some sort. So yeah, so I just want to keep you to about 5 minutes here. But yeah, these are two peaks that I'm seeing in the model. Again, they're peaks, so I'm expecting some type of move up, and then, like I said, it's peak. But these could be very strong moves up in the market. So that's it's nice to be able to see this, right? It's a 10-minute model, so I assume it's going to be a fairly strong move up when it hits. And I really hope that it's the Wednesdays, because that would be very isolated and hopefully a lot easier to play. Looking at futures tonight, futures are only down about 15 points. They were down, I think, 50 at one point. I think 60 to 70 points. So really, when you get about 70 points down in the futures, basically the market likes to run the opposite way. Basically because you have that 1% shift. And so what happens is you get basically a gap between some of the moving averages and the sell-off. And the markets like to close that gap. So usually when the gap reaches about 70 points or a little bit more or a little bit less, then you'll see the whole market shift. Even today on March 10th, some of you who are watching markets closely noticed around the last hour markets shifted very strongly upwards, and so basically it created a 70-point gap between, I think, the daily moving average and the sell-off value. So there's like a 70-point differential between the two, and so then it closed the gap into the near close, right? So I think we hit we hit 55.60, and then I shorted around 56.30, so about 60 to 70 points above where we bottomed. That's kind of how I judge it. It's I think the algos are synced basically for 1% shifts, if you will. And so for a market value of 5,700 or 60 some hundred, basically a little over 1%, right? So that's kind of how I do things. I've spent a lot of time trying to sync my moving averages, things of that nature, and that's where I've gained all this experience from, is really taking a lot of time studying moving averages and the S&P 500, and then shifting through the different time frames and building my moving averages. So when you switch to different time frames, one moving average syncs with a different time frame, syncs with a different time frame, where they tell the same story. As you shift through the time frames, a different moving average will take the place of another moving average. So maybe on the hour scale, one moving average is 5,600, and then on 2-hour scale or 3-hour scale, 4-hour scale, that 5,600 is taken by a different moving average. So basically, as you flip between the moving averages, the same level is shown, and so that's how I've adapted my system. If you're wondering how I've come up with my moving average system, I've spent probably 6 months studying moving averages. TradingView does a great job of allowing you to build indicators. So I just put tons of different moving averages together and checking how markets move in the 70-point theory, things of that nature. So yeah, that's a little bit about my progress in how I study my moving averages. And then obviously I try to sync it up with my timing. So again, just to be very clear, I hope that there's a sell-off very strongly into the end of the 11th, and then 8:30 in the morning on the 12th. Let's say we do have a very strong sell-off on the 11th, then I'm guessing that we're going to have a strong up move on the 12th. It may be only a 4-hour candle. I don't know, but it's saying that there should be strength. And so what happened, I think I looked at a different time frame. No, I would definitely think that it's more of a daily candle strength, because this is the 10-minute time frame. So yeah, so I would think you might have a green close on the 12th, possibly, and on the 19th. But you know, that's how I would lean. I guess I would say that I would lean to that. Well, but at least see some major pop upwards in the markets on these days. So hopefully I've given us the best guidance I can. Thank you so much for joining me. Thank you for all that have followed my work over these past weeks. Really enjoyed it. Really enjoyed watching the model perform, and hopefully that this video finds itself to be highly accurate and you find it highly helpful. Until next time, I'm BR Schultz, SP500. Thank you so much for taking the time to view my videos, and if you love my work, please feel free to share my work. I love it. That so many people hopefully are gaining insights and at least entertainment out of my work, and that's really where it's at. So hopefully these videos do that for you. Until next time, I'm BR Schultz, SP500. Take care. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast.
Use?
Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
an licensed
licensed
investment
investment
professional.
professional.
That's Latin. So say caveat emptor.
Caveat emptor.
Seek
Seek
professional
professional
advice
advice
prior
prior
to
to
investing.
investing.
Investing bears risk
Risk of
financial.
financial loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.